Welcome to Cortburg Speaks Retirement, an audio podcast about investing in the stock market, financial planning, money management, and retirement planning. Each Wednesday, we help investors at all stages of life learn how to potentially grow and preserve their money from first job through retirement. Now here's your host, Miguel Gonzalez.
Good morning and welcome to the Cortburg Speaks Retirement audio podcast. On this week's audio podcast, I share a few ways to avoid common tax identity theft schemes as you approach retirement. Tax identity theft is a serious type of fraud that affects individuals of all ages and stages of life. To steal a person's identity, a scammer uses the person's social security number and other personal and financial information to fraudulently file a tax return and claim a refund that they're not entitled to. Scammers often report little to no income and many deductions to get the largest refund possible. What's worse is that the victim may not find out they have been defrauded until they attempt to file their actual return, only for it to be flagged and rejected since the IRS has already received a copy of the false tax return on file. So what do you do to prevent your tax identity from being stolen? Here are a few of the most common tax identity theft schemes and ways to mitigate them as you begin to approach retirement. What tax identity tax schemes are most common? Here are the most common theft schemes to watch out for. One is phishing scams. Scammers send emails or messages that appear to be from the IRS or tax preparation software providers. These messages ask for personal and financial information, often under the disguise of a false need to verify information to prevent fraud. Never click on suspicious links or provide personal information via email or text to avoid falling victim to a phishing scam. The IRS does not initiate contact through email or social media. Another common one is stolen social security numbers. Thieves may use stolen social security numbers to file fraudulent tax returns and claim refunds. To avoid this, safeguard your social security number and other personal information. Do not carry your social security card in your wallet. Only provide this number when absolutely necessary. Be sure to shred all documents containing sensitive data. Another one is impersonation scams. Scammers may call or email pretending to be an IRS agent or tax professional and demand immediate payment for supposed tax debts. The IRS typically communicates by mail first, not by phone or email. Always be cautious of any unsolicited communication regarding your taxes. So, how do you defend against tax identity theft? Here are some steps to take to manage risk. Guard your personal information. Safeguard your social security number, financial account information, and other sensitive data. Only provide this information to entities you trust. Never share it online or over the phone unless you initiate the contact by emailing or calling the organization's official customer service contact. You want to also use strong passwords and two-factor authentication. Create strong, different passwords for each of your online tax accounts, financial institutions, and email. Do not use any password on more than two or more than one system, and always use two-factor authentication if it is available. Another way to avoid it is to file early. Filing your tax return early helps decrease the window of opportunity for scammers to file a fraudulent return in your name. If you are due a refund, you want to file for it before a scammer does. Another way to avoid it is to monitor your credit. Regularly check your credit reports for any unusual activity like new accounts you did not open or credit inquiries you do not remember. Discrepancies on your credit report may be one of the first signs that your identity has been stolen. Another way to avoid theft is be skeptical of unsolicited communication. So again, be skeptical of unsolicited communication. If you receive an unexpected call, email, or message related to taxes, ensure that it is legitimate before taking action. Contact the IRS or relevant entity directly through their official website or phone number. If the call is really from the IRS, they will understand and encourage you to confirm it is legitimate. If you think like you've become a victim of tax identity theft, immediately report it to the IRS, your tax state agency, and the Federal Trade Commission, the FTC. They will help you resolve the issue. Consider identity theft insurance to help manage this risk as well. Make sure to visit our website, www.cortburgretirement.com. Our site is filled with educational videos, ebooks, publications, and financial calculators designed to help you learn more about your finances. As you search our site, send us a note regarding any questions you may have about any particular investment concepts or products, including identity theft. And we will get back to you quickly with a thoughtful answer. This is Miguel Gonzalez, certified retirement counselor and managing partner with Cortburg Retirement Advisors, signing off for this week's educational podcast.
The opinions expressed and material provided are for general information and should not be considered a solicitation for the purchase or sale of any security. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Securities offered through LPL Financial. Member FINRA SIPC. Investment advice offered through Private Advisor Group, LLC, a registered investment advisor. Private Advisor Group, LLC, and Cortburg Retirement Advisors, Inc. are separate entities from LPL Financial. Investing involves risk, including possible loss of principal.